for a technical update on the equity markets. The Nifty opened on a positive note today and traded in a sideways manner for a couple of hours after the opening of the today's trading session. However, the selling pressure from yesterday and day before yesterday, or rather to say from last three consecutive trading sessions, resumed, and the Nifty dragged down very sharply. And though the Nifty didn't show the exact sharpness of the fall, however, we saw stocks which were tumbling down more than 8, 9, 10% in today's trading session. And the Nifty also ended the day with a negative of 108 points. The market breadth was negative with 229 advances to 1300 declines. Mid cap and the small cap index both were down close to 3% each in today's trading session. From the Nifty 50 pack, HDFC, Reliance, L&T, ICICI Bank, State Bank, BHEL, Tisco, NMDC were some of the major losers in trade today, while TCS, ITC, Infosys, HUL and Sun Pharma, majorly all the defensive stocks closed with gains today. Now we will have a look at the daily charts. On the daily charts, we can observe that the Nifty has closed in the negative for the fourth consecutive day. It is trading below the 20-day simple moving average and above the 40-day simple 40-day exponential moving average. Now in the coming trading sessions, 40-day exponential moving average becomes a crucial level to watch out for, and if in the coming trading sessions we continue to trade below that, then the selling pressure might just intensify further in the coming trading sessions. Today we have closed for the week, and an important observation on the weekly charts, we can observe an engulfing bear candlestick pattern on the weekly charts, which is not at all a good sign for the markets and Nifty in the short term. So overall, the strategy on Nifty should be to sell on every rise and not to be on the long side of the trade until we get some confirmations that we are seeing a pullback of the recent fall. Until and unless we see some signs of pullback, traders should be on the short side of the trade. Now moving on to the hourly chart, we can observe that the Nifty is not just giving any signs of pullback. Every pullback is being sold into, which indicates that every rise that we are getting is just a minor rise, and every rise is a sign, is a selling opportunity for traders in Nifty. It is currently trading below the 20 and 40 hourly moving averages, which are placed at 7566 and 7607. So in case we get a pullback, 7566 and 7607 are the levels where traders can initiate shorts, because these are crucial resistances and will act as crucial resistances for the Nifty. On the downside, 7400 and 7370 are crucial supports. Now moving on to the chart of Bank Nifty. Bank Nifty for the fifth consecutive day has closed in a negative, and it is leading the fall in terms of indices. We can see stocks like Oriental Bank of Commerce, Allahabad Bank, and some of the banking sector stocks which are almost every day closing down by 5% from the previous day's closing, which indicates that the major fall is coming in the banking sector stocks. Now we expect the downside or the downtrend in Bank Nifty and banking stocks to continue. On the downside, 14,350 and 14,150 can act as supports. On the upside, 14,650 and 14,850 are crucial resistances. So overall, friends, our view on the Nifty remains negative. Our short-term target is placed at 73.70 on the downside. On the weekly charts, we can observe an engulfing bear candlestick pattern, which is not a good sign for the bulls in the short term. So the trade remains. So the strategy to play on Nifty should be to sell on every rise. That's all for the day. Thank you.